Good afternoon, everybody. I'm Doug MacGinnitie. I'm the CEO of River Oak Risk, head here in Atlanta, Georgia, and I'm joined by Scott Stettler, who's the CFO of Wasatch Group. And we are going to spend a few minutes talking about how to prove operational efficiencies, make some money, and lower your costs around tenant insurance, tenant liability to the owner and property manager's property, and using captive insurance to do that. Scott, why don't you start with an introduction, and then I'll follow up with mine.
Okay. Thanks, Doug. I'm Scott Stettler. I'm the CFO for Wasatch Premier Communities as well as Wasatch Property Management. We are a owner managed group. We do not do any third-party management. We have about 17,000 units across the West. And we are out of the reason for the Wasatch name is we are our corporate offices are along the Wasatch Front in Utah. So I've been in the industry about 15 years with Wasatch, and that's my intro.
Perfect. Again, I'm Doug MacGinnitie. I'm the CEO of River Oak Risk. We operate in a very specialized niche of the multifamily space. We help owner-operators put together programs that allow them to drive some operational efficiency and make money around their tenant insurance and tenant liability insurance requirements. We've fell into the business, but today do either manage or are implementing programs with I think around 125,000 units in the program. So we have a lot of expertise in this very niche area. So Scott, like everybody else today, it's probably worth under the auspice of what we're talking about, touching on your experience, given your size and expertise in this space, about how you've navigated the last couple, 3 months and what you see going on in the industry.
Sure. Yeah. So like I said, I've been in the industry about 15 years, and it's interesting because it's been great to listen to these other panelists talk about technology and the things that go along with that. I over the past 3 to 5 years, I think there's been more technological advancement in the multifamily space than I've seen in the entire 10 years prior to that. And that has been exciting, and it's also, I think, somewhat prepared us for this current time. We at Wasatch, we take advantage of a lot of those technologies. We're always trying to find the latest and greatest and provide the best service and the best technological advancements for our residents. And so we take advantage of the smart apartments. We take advantage of the lead management software and all of these things that have helped us in this time with COVID. So yes, and it's taken a lot of training on site on how to deal with this time, and that's been a key, as well as really teaching our people how to listen and solve problems for the residents. And so we're also looking at the possibility of things getting tougher on rent collection in the third and fourth quarter and even into 2021. And then how do we handle that? And what are the how do we save costs both at the management company as well as on site? And how do we increase revenue in other ways to offset some of the rental loss and the collection loss that may be coming? So exciting times for sure. Not exciting in a way that we all want, but the industry is always exciting and always changing, and we never know what's coming next. So
that's great. So I guess drilling down now on the tenant liability program, tenant insurance, take a second and talk about what y'all did historically around tenant insurance. I think the industry standard is now to require it in most leases. But talk a little bit about what you did historically in the space.
Sure. I think I'm trying to remember even how long ago it was. 7+ years ago, we started requiring renters insurance, all residents to carry renters insurance to cover our liability, the liability from tenant-caused damage, things like that, and so we had a standard HO4 policy that we used, and we worked with a large provider in the space, and we were very successful. We had a pay with your rent program, and we'd get 70 to 75% adoption on that program with a revenue share with that company. But we still had a full-time person as far as administering that program, making sure that every resident had renter's insurance, because one of the things with that program is you cannot force a resident to use the program that you're recommending. All you can do is recommend that program and hope that they use it and make it easy enough to do so. And like I said, we had success, but there's also that other additional 30% that wants to go out and get their own policies. And so there's a lot of administrative work around that to make sure that we were covered, and that there weren't gaps between coverage. And so, but like I said, we had a revenue share that was okay, but it wasn't good enough for us to be able to share that revenue with the properties and increase their NOI, and in turn increase their value at the property level. So it really kind of covered the administrative work at the management company level, but we started thinking. I started thinking a couple of years ago about a captive insurance program, and how we would use that captive insurance program to then decrease our administrative costs, decrease the headache of tracking down renters insurance policies, and really increase the revenue that came to us as a management company, that would do so in a way that would allow us to do some revenue share with our properties as well. So,
and for the leasing agent, was it a big pain for them to collect these certificates of insurance and track it down, or had he all ironed out most of that eventually?
Well, we had a dedicated person doing that for our company. So as far as in the leasing office, I think the biggest struggle in the leasing office is making sure that leasing agents were not acting as insurance agents, because they can't. And so there's a lot of training that went into what they would say to the resident, how they would recommend a program. It did fall on the leasing agent somewhat to make sure that we had those certificates. And so, yeah, it created work in the leasing office, and it created work administratively in the corporate office. So
we met, I don't know, I think it was over a year ago. And again, what we do is we work with owners and managers to design programs that work for them and allow them to, capture the economics and drive some operational efficiency. But, talk about it sounds like you've been thinking about this for a long time before. Talk about the process you went through in making the decision, and then we can talk about a little bit about what was implemented and how it's turned out for you.
Okay. Yeah. So we, like I said, started back a couple of years ago, really digging into captives and the benefits, and looking at, and we started talking to other providers in the space, even companies that were offering similar captive type programs. But again, I just kept struggling with the revenue share that was coming to us, and how minimal it was. And I kept looking at the money that was going to the insurance companies. And I could look at our previous claims history and see that there really was a potential for us to have that flexibility that we needed with our own captive insurance company, as well as just improve the financial dynamics of the program for us, because we were doing all the work anyway. So I apologize. The question, I think, was, how did we go through that process? I think that we started evaluating that. We looked at that and said, how can we do this ourselves? I have a tax background as well, so I started looking at the tax benefits of a captive insurance company, and those were definitely interesting. So you look at the 831B election; it allows you to not pay taxes on 2.3 million of premiums, and you look at the benefit of being able to deduct the costs of your reserves as you put them in as an expense, and you start looking at these things, and all the benefits just started adding up, and that's when I happened to come across you, Doug, and River Oak Risk, and the timing was right. And Doug and his team came to Salt Lake and met with us, and I was very impressed with the team, and that's how we started moving forward.
So, I mean, I think you touched on thing that's probably the most relevant or most interesting reason these things work is that the renter winds up paying a bunch of money in insurance every year, but as you saw, the losses that they generate to your property are very low, which means at its core, somebody is making a bunch of money off the renter insurance product. And that's what's interesting, right, is allowing an owner to capture that. I've been to, I don't know how many IMN conferences, and I'm sure you've been to all sorts of real estate multifamily conferences, and there's a constant discussion about alternative revenue streams and driving, different and other ways to make money off the assets that you own. And this is clearly one where somebody was making a bunch of money off your asset and your insurance requirements. And so, the general idea of building a program, allowing the owner or the operator, you to capture those economics does seem to resonate with a lot of folks. But there's some other benefits as well, or that we've heard from our clients and other folks in the industry, other than making money, which is great. But what else? What else have you seen in terms of benefits from your end, and what else are you expecting out of it?
So we're fairly new in the program. We're rolling out. We're 7 months into this, and the thing that I like about the program, and what I think is really a big opportunity, is the flexibility of having your own captive. Everyone can create their own captive insurance program, depending on their comfort level, right? Their comfort level of liability exposure, their comfort level of how they want to communicate the program to the residents, whether or not they want to build wording into the lease that's tied to this program. And so we found a lot of flexibility. And initially, what I love about it is that when we rolled it out, we took a pretty, I'd say, pretty low administrative load, to roll this program out. It was pretty light on our side, and we kept the wording out of the lease, and we built the cost of the tenant liability program into our rents, and the communication to the residents at this point is you are not required to have renters insurance, and the question has not come up from the residents of, well, why am I paying $10 to $15 more or whatever than your competitor? And if it does, that is kind of our response now is, well, we don't require a renter's insurance policy. But, we chose things initially to leave out of the program, but now we're going to go back. We've got the time. There's no urgency here. We can now look at personal property coverage and adding that. We can look at other things such as builder's risk and expanding this captive insurance company to do some other things that allow us to be that insurance company rather than paying a third-party insurance company. And so I think some of the other things is the cost to the tenant is not an increase. It's in most cases it's a decrease in cost to the resident, and where you're paying in a lot of areas you're paying $15 to $18 a month for renter's insurance. This really is a built-in cost of $12 to them, and so they see a little bit of a decrease in that cost, and they can, we're working now on the presentation and the wording to the residents that says there's kind of the marketing side of this, because there's a marketing aspect to this that says when you come and live at our properties, we're limiting your risk for damages caused by residents. Now we're being very careful on that and how we present that. But we're thinking about that, and that's an option for us to use the marketing aspect of this really make the residents feel good, sleep at night, sleep a little bit better at night, knowing that the liability side, the property's covered on the liability side for renter caused damages.
And I'm sure not everybody on this call is an expert in captive insurance, but it's worth just follow up on a couple of things there. One is the structure that these programs take is each owner manager winds up with their own captive insurance company. And we have seen many of them use those captives not only for their tenant liability program, but then also to lower costs in their other part of the insurance cost structure that they have. I'm sure most of the folks on this phone call who are in the business have seen substantial to very substantial increases in the cost of insurance for their properties. And we have a number of clients and a number of folks use captives to lower those costs, which is one of the benefits of having this kind of program. And then the second is we often get asked the question, well, how much do people make? And the rough math that we've seen is that an owner should expect to make about $100 per year in profit per unit with these kinds of programs. That's the kind of money that the insurance companies were making. So if you have 5,000 units, you ought to be making about $500,000 a year in profit when it's all said and done. Transitioning just in the last couple of minutes, Scott, in terms of the implementation of the program, what issues came up? You mentioned a little bit. Was there any tenant pushback? What about leasing agents? Changes. You asked them to do a lot of stuff. Was that a big burden for them, or anything else that you saw on your side that is worth commenting on?
So something that's always a dilemma in multifamily is the amount and the complexity of the initiatives you roll out to the properties. There's a fine balance, and you can overwhelm your properties very easily by rolling out too many initiatives at once, and or rolling out too complex of an initiative. And what we found with this program is it really was it was very painless. I've been through several initiative rollouts over the past 15 years, and this one was one of the easiest. And reason being is I think that we were able to take our risk management, someone from our risk management team that already handles our insurance, manages our previous renters insurance program, manages the insurance renewals, and we took her and we paired her with our trainer for our sites. And so we had risk management and training paired together. And what we did is we made them both the owners of the rollout. And by doing so, and just having, we really only had, I think we offered 3 or 4 training sessions. We kind of did it by region, and we had each region on a training call. And we had a couple of follow-up calls. Of course, you never get everyone on the one call. So we had a few follow-up calls in each region, went through the program, and made sure that we were covered on the risk management side, make sure that people understood the policy and the coverage between the captive insurance and the property. Because remember, this is not a policy between the resident and the captive. We are insuring the property. And making sure that they kind of understood that, and then made sure and got the wording correct as far as how to communicate to the resident, which is we still encourage renters insurance for personal property coverage, and we just don't require it. And so we went through that program. It like everything, there's little bumps in the road, but we really only had 1 month where we had a handful of questions from leasing agents or property managers. We worked through them. And the rollout has been very smooth, and the feedback from the residents, they're not going to complain because now you're not requiring renters insurance, and they are, and like I said, that payment is built into our rent structure to where they feel like it's a win-win for them. And like I said, we may expand the wording on that to really build it into our marketing to say, by living at our properties, you have this additional benefit of liability coverage. The property's covered for certain liabilities. So we're still working through that piece, like I said. But overall, the rollout was very smooth. And I will tell you that the adoption is really based on turnover. As the units turn over, they are put on the program, and we are right on track with where we projected to be on the initial pro forma, and looking at probably 3xing. When we stabilize, we'll 3x the amount of income that we were getting versus a revenue share program with renters insurance.
So we've had a couple quick questions that I'll answer before we wrap up. One was, how do state insurance regulations apply to this type of revenue source? And Scott mentioned that the trick is in the way the program's designed, so that there is not an insurance transaction with the resident. It's between the owner and their captive, and so I mean that's part of our expertise in making sure all that works. And then the second question was, how is the coverage terms versus your traditional third-party insurance companies? Is it competitive? Also, how does it work if you sell the property? Does the insurance coverage continue? On the second part, the program is designed so that if there's a disposition of a property, that property rolls off the program because it's no longer part of the owner's purview. And in terms of the coverage, it's really geared towards tenant cause loss to the owner's property. As Scott said, they still encourage their tenants to go buy contents insurance if they need it, or other insurance. But in terms of the piece of tenant caused damage, that's what the program is really focused on. We do have some clients that have added some limited contents benefit, but that's really sort of an add-on.
Doug, could I add one thing to that?
Absolutely.
Really quick? Because it is a captive, it's our captive, it's our insurance company. We also added some flexible wording in there that allowed us, if there was a fire and someone was out of a unit and they had to go rent a hotel, or something, we put some flexibility in there for us to make the decision. If we decide it's in the best interest of our resident and the reputation of our company to go put them in a hotel and reimburse the property for that cost because a water heater blew up and burnt 3 units, that stuff happens, and we want to be able to provide the customer service level with that flexibility in our captive insurance, which you can't do when you're dealing with a typical HO4 policy.
Yeah, that's a great point. So we are almost up against it. I don't think I have anything else on my agenda. Scott, was there anything else you wanted to touch on or talk about today?
No, I don't think so. I just I know that River Oak Risk has been great to work with. Thank you, Doug, and your team, but also just that this has been a smooth rollout. Like I said, we've done a lot of initiatives over the years, and this one's been smoother and easier to roll out than most. So,
well, we appreciate the plug, but mostly appreciate you taking the time to talk through your thought process and how you've gone about it. So thank you very much.